very warm welcome to Bharata First. You're watching Big Picture with me, Frank Rausen Pereira. First, let me inform you about Bharata First Knowledge Center, an initiative that will help each one of you and transform the way you learn. You can go to our website, kc.bharatafirst.com for more details. Ensure that you look at the FAQs. Most of your questions will be answered there. Register now and avail the limited period early bird discounts. The orientation is on June 30th and live classes start on July 1st. So register today and don't miss out on this opportunity. Since you are here, I would like to thank you for your continued support. For those of you who haven't already subscribed, please like the video, subscribe, hit the bell icon and then all notifications, and do share the content as well. You can subscribe to our newsletter as well to get some incisive content. The Bharata First team runs a daily Big Picture quiz. Please do participate by going through the description in Big Picture videos. Here are the UPI IDs for those of you who would like to come forward and contribute. A small contribution that you make will be a giant leap for us to keep bringing you this content. In case you have trouble with UPI IDs, you may use our payment link in the description below and follow the steps. All this information along with some must-see recommendations are in the description of this video. Please go through it. And now on to the discussion. India had attracted a total foreign direct investment inflow of 6.24 billion in April, up by 38% year-on-year, according to data released by the Department of Promotion of Industry and Internal Trade last week. Total FDI includes equity capital of unincorporated bodies, reinvest earnings and other capital. FDI equity inflow grew 60% to $4.44 billion in April. Mauritius is the top investing country with 24% of the equity inflows in April. This is followed by Singapore, that continues to remain one of the top sources of FDI for India with inflows at 21%, and Japan at 11% respectively. As far as states are concerned, Karnataka is the top recipient state during April 2021 with 31% share of the total FDI equity inflows, followed by Maharashtra at 19% and Delhi at 15%. In this edition of Big Picture, we will analyze the rise in India's FDI. Joining me on the program today are Jayant Das Gupta, former ambassador of India at the WTO, Shubhamoy Bhattacharjee, consulting editor of the Business Standard, and Dr. P. Pulla Rao, economist. Thank you to all my guests for joining me on this edition of Big Picture. Ambassador Das Gupta, I'd like to start the program with you first. Let's first understand and analyze, this rise in India's FDI by 38% year-on-year to $6.24 billion in April. How do you look into this and how do you read these figures?
First of all, I think it is a heartening development that FDI reserves have gone up on the face of it. But when you dig slightly deeper, there are certain reasons why it has risen. One of them is the very large inflow of foreign portfolio investment. It has gone up by 19% to about $60 billion or so in the last year. And as you know, the foreign portfolio investment and short-term debt, these are very highly volatile. And that is why, they come in very quickly over a short period of time, and they can also move out equally quickly. So that is one factor. The second factor I would like to point out is that our import bill has been much less than last year. For the April-February figures, we had imported about $130 billion less than in the previous year. Even if you take the April to March figure, we would probably have ended up about $100 billion short of imports. As far as the exports are concerned, by projecting for the month of March, we would probably have a deficit of only $28-30 billion from the previous year. So overall, the import-export imbalance, I think, has also led to this high foreign exchange reserve as compared to the previous year. One of the good things which has happened is that the foreign inward remittances, which have kept our economy propped up and helped very significantly, that has not dipped very substantially. It keeps varying between 70 and 80 billion dollars, and it is still at that level. So, as far as inflows are concerned, the foreign portfolio investment, the foreign remittances from NRIs working abroad, and the import bill has gone down, the exports have gone up. These have all contributed to large foreign exchange reserve gain in the last financial year.
Right, Shubhamay, let me bring you in now. Is there a way that we can leverage this, and how do we see? Because Ms. Dasgupta has already very, so eloquently put it across that this is extremely volatile when we look at foreign portfolio investment. They can come in at any time and go out at any time. But is there something that we can leverage with regards to, FDI in terms of the economic situation that we are in right now?
Yeah, interesting. I mean, that was quite a nice, good view, synoptic view from Mr. Dasgupta, and given his background, I mean, he would understand this thing so well. So, if I look at just the FDI component, as it has definitely risen, and one of the key reasons why it has risen is that you know there was, I mean, you have to look at the change in the nature of the economy that is gradually happening. So what's happening is, if you look at the constituents of the FDI, you'd notice that a large percentage of that money is coming into projects and into stuff which are essentially completed ones, essentially what we call the brownfield investments. Now, why is this happening, and why does it create such a room? Well, Indian economy over the years has been trying this basic idea of trying to get companies or other even government departments to create projects which will attract foreign investors. Now, initially, when we were talking about, if you look back about a couple of decades ago, at the time, the idea was that we should have greenfield FDI. And essentially, the idea was that there should be investors coming in who will set up a project from scratch and build up and make it and start executing it and run it. It sort of didn't really happen. India is not a very conducive place for a foreign investor to come in and just do everything from scratch. There is, right at the beginning, land issues, there's environmental issues, there are a whole host of state level problems. Ease of doing business, it's only now that we are at a reasonable pace, but even there are lots of gray areas. Essentially, therefore, foreign investors have always wanted to come in and tie up with a local partner and have ease of access of coming in and coming out, going out. Today, after so many practices and tries, we seem to have gradually getting into the place where we are able to do it. Let me give an example. The road sector, for instance, has been able to create this investment trusts. Now, their numbers is increasing. And why is this happening? Because essentially, these are projects which have been done by NHAI through the EPC mode. Now, when the projects have been completed and are in the process of being tolled, or they might be getting shadow tolling, which is the annuity system, they are ones with regular rates of return. Obviously, that's something that would attract an investor. So a long-term investor from abroad would say, this is fine, even after I have taken care of my exchange risks. I mean, we can go into the arithmetic of it, but broadly, it works out fine. So they come in, they don't have any constructional risk to take up. They simply put in the money in a ongoing work, a project which is already completed. So it's now post-completion date. And they're fine doing it. The reason why Reliance Industries, for instance, has been able to attract so much of investment is because Reliance is showing up a series of projects which they have completed
Right.
to execution and are offering to Facebook, Google, British Petroleum, Now, Saudi Aramco, what is happening essentially? That they have the projects which have been completed, they have taken on the construction risk, and now their investors who are coming in. Now, this works fine for India because this is what India is essentially able to do. We are not very good at bringing in investors from abroad. Like take the example of POSCO, which happened in for about 10 years we just kept on struggling, it never went anywhere. Or other projects which were similarly given to foreign investors, but famous marquee projects, they never got off. SEZ, for instance, they never got off with foreign investors. But foreign investors are comfortable coming in when a project has been completed and somebody offers them a percentage of investment into it, and they're fine to pick it up.
Sure.
Now, as it's what's happening is gradually more and more such projects and a large number of such projects are coming up front, both in the government as well as in the private sector, which is why you see the jump up in the level of FDI.
Absolutely. Absolutely. Dr. Pullarao, let me bring you in now. So we've figured out where the money is going. Completed projects is what we are looking at. But where is the money coming from? Now, that's something that we need to look at as well. And what are the kind of investors that are coming into India who want to bring their money here? And what is it that they see in the Indian market?
First of all, way back in 1955, great Milton Friedman was incidentally a consultant to the government of India. Not much known, but he was a consultant. And the recommendations he made on foreign direct investment, one looks back, you find that from 1990s, maybe Dr. Manmohan Singh implemented it in total. The idea of foreign direct investment coming into India, having a greater impact in India, is, as he pointed out, was a great pool of scientific, technological, management, human resources already available in the country. If foreign direct investment goes to, say, a Sahara country, sub-Sahara country, all these other aspects are not there. Everything has to be started from scratch. So India already offers, in that sense, a great advantage for somebody coming in here. But of course, there are other aspects like the judicial aspects, the ease of doing business, the tax regime, so many other things where reforms also have to be kept up so that foreign investment does feel fine. We come in, we can also exit, and other things. So therefore, that has to be done. Keeping that in mind, the investment coming in now is, as our two guests have said, some of it is going into brownfield industries and some of it is going into portfolio investment. Whether portfolio investment is helpful to India, yes, it releases other capital which can come in. The shortage of capital is met. But one of the things that we all looked forward ever since the US-China trade war was that massive investments would come into India. A lot of factories would be shifted to India, the big ones making iPhones or iPads and conductors, whatever. Has that materialized? I don't think to the extent which some of us were hopeful for. They went along, stopped at Vietnam, maybe Cambodia, Singapore, Malaysia, other places. We haven't been able to get that investment, which perhaps could have come to us had all the other factors been taken care of, ease of doing business, the taxation, other things. So I would say that the great best foreign direct investment would be in a greenfield industry, especially where if you go back to the old theories of import substitution, which the ambassador and Mr. Bhattacharya pointed out, one of the aspects is if they make it here, what we are buying abroad, we gain. We gain employment, we gain so many other things. And perhaps, the massive amount of arms which India is buying, I believe we are the biggest arms importer in the world. Many of them are setting up subsidiaries, servicing centers, so that also helps. So we should ideally look for greenfield industries. We should be more aggressive in trying to get the bigger investments which are in China, which want to shift to other places for various reasons, including meeting domestic demand of a particular country or a geographical unit. So that, I don't know whether we have been that aggressive, or has there been just we are open for business and left it at that. I believe that has to be a little more effort should go in, more targeting should be done, more investment teams should go out, meet these people. I don't think they're doing it that much. Otherwise, we would have seen a very big investment scenario in India. That is not happening. And in the way it should, and this is a good time for that to happen because there's a lot of turmoil, various trade pacts between the US, Trans-Pacific Partnership, all of them have been broken asunder by the Trump regime. There is a gap, there is maybe a vacuum, and are we exploiting it enough? Maybe not. I'm not a pessimist, but there is room for a drive and thrust to go and target bigger units because India is a huge market. We buy the
Sure.
most number of things. So therefore, we have to be a little more aggressive, get more foreign direct investment.
Absolutely. Since we are here, then, Mr. Dasgupta, let's talk about this aspect as well because both panelists have raised it. So, how do we make foreign investment more conducive? How do we invite more investment into India and get the right kind of investment? We're not just looking at foreign portfolio investment, but also those who want to invest in the long run.
If you look at the FDI figure, and I quite agree with the other two panelists, that FDI has been mainly in greenfield investment, in brownfield investment, sorry. And if you further analyze it, you will find that apart from exceptions like Reliance, in the refinery project, for instance, Saudi Aramco may invest, and it was, put off because of COVID, etc. Most of the investment flows which have taken place in brownfield areas have been in services. You look at Geo, for instance, Reliance Geo, it is in the services industry. You look at Byju's, Unacademy, for instance, which is sponsoring the Indian cricket team, Paytm, OYO, all these are startups and they have struck gold. They have succeeded in getting a lot of foreign investment. But if you look at the core area of manufacturing, which Dr. Rao mentioned, very little has come in. It has come in the form of foreign technology collaboration, purchase of foreign technology, but foreign direct investment in substantial measure has not taken place. Now we come to the other area which Mr. Bhattacharya has mentioned. It is about infrastructure projects. In infrastructure projects, yes, roads have been, I think, one of the shining examples of attracting foreign investment, and that to long-term investors, because a road project takes about 20 years or 25 years before it pays back the full investment. But there are other areas, of course, ports is another example where foreign investors have put in money in the development of major ports. But if you look at other areas, there is still a huge gap of financing of our capital requirements being met. So in manufacturing and infrastructure development, therein lies the rub. That is where we have to focus, and that is where we have been deficient. Now, if you go further and find out what are the reasons why people have not invested in our manufacturing industry, and that brings us to the issue of ease of doing business. Of course, we seem to be going up a little bit every year in the ease of doing business index of the World Bank. But you talk to any foreign investor, prospective investor, what they are afraid of is the multiple levels of the bureaucracy which they have to negotiate, the large number of agencies which have to give clearances, and finally, what is extremely galling to them is that there are no timelines. You will either get a yes or a no in 15 days or in 1 month. That is not there. Somebody will raise some objections, will ask for further details, further papers, and the process will continue. Even if you require, let's say, 10 approvals, 9 of them you may have got, but the 10th one may get stuck and delay the whole process. That is the kind of problem that we are still facing, even though we have had very good exercises like the Invest Smart and the states taking a lot of initiative. The states which have sorted out their own problems of providing approvals, etc., they have been able to attract some investment,
Hmm.
at least from the domestic investors. But foreign investment is still not coming in the manufacturing area because of these problems of investing. And of course, the exit policy is also a bit of a problem. And finally, in manufacturing, you are dependent on a whole lot of other services. For instance, electricity supply, water supply, logistics, accessibility to a port, and easy evacuation, quick evacuation from the port, and import of raw materials and components should not take too much of time to travel from the port to the manufacturing site. Now, all these are problems which have really not been sorted out yet. If we compare ourselves to, of course, a world leader like China, we find ourselves wanting in many respects. If we compare ourselves to a country like Vietnam, which has taken very rapid strides in the last 10 or 15 years, we again find ourselves wanting. So these are some of the things. And the last point which I wanted to mention is the allotment of land. Because the manufacturing industry, unlike a services industry, which can thrive on a small plot of land and it can work virtually, manufacturing industry will require land, unencumbered land, all the clearances given, and that is again a bit of a problem, but it can be solved. As the Baba Kalyani committee has pointed out, there is a large amount of land available in the SEZs, in the industrial parks, which are controlled either by the central government or by the state government or by private investors, which have still not been taken up. So there are ways of moving forward, but the government has to work in unison. The central government, the state government, and all the organs of the state government have to work in tandem towards achieving one common objective of facilitating investment. That is the key message that needs to go down.
Absolutely. Absolutely. Shubhamai, just adding and building on the points that Mr. Dasgupta has made and Dr. Pularao had made, and let's take that particular aspect forward. As far as manufacturing and investment and bringing in more money into India is concerned, do you believe that we have missed the bus somewhere and it's going to be difficult going forward because the others seem to have, taken the lead with regards to Cambodia, Vietnam, Singapore, Malaysia, and several of the other Southeast Asian countries?
Frank, whenever I look at the list of the countries which have done well in Asia in drawing in foreign investment into manufacturing, greenfield, as Dr. Rao was pointing out, Mr. Dasgupta was also pointing to the need for those. These are countries where the governance is essentially one party led. And this is something that we have got to sort out among ourselves. And what are we trying to do and what is it? It's a difficult question, but it is something that we always brush under the carpet, saying that, our boisterous democracy allows us for lots of voices to come through. But that voices to come through essentially means, to take what Mr. Dasgupta was saying, that if there are 10 clearances to be got, and if one clearance is held, that person who has not given that clearance can simply go up somewhere and create a noise that this clearance should not be given. And it is the voice of one company versus another. Today, for instance, I'll tell you an example of Bandar diamond fields in Madhya Pradesh. This was a field which was prospected by Rio Tinto as a greenfield project. I know about it because I wrote about it in 2007 and 8. It ran into environment problems because obviously a diamond field would require cutting of trees. They promised environmental things. Rio Tinto has got a very strong environment footprint in terms of being able to make us redo what they cut, but it didn't pass muster. So Rio Tinto left all its equipment to the then Madhya Pradesh government, and with a hope that probably the next prospector will be able to do something better. In 2019, SL Mining of the Birla Group has got the prospect again. And again, the same allegations have come up about tree planting, tree cutting, and all the sort of stuff. Now, given this sort of a thing, what exactly are we aiming for when we say that, governments need to get together or states need to get together. It's a question that keeps on happening over decades. Whenever any project, major project, which Mr. Dasgupta was rightly pointing out, needs a land, it will run into problem. There is no way, and I'm absolutely sure about this now, that there's no way that the eastern parts of India can get any land-based manufacturing to start because of the population density. Even in southern India, Dr. Rao would remember the Amaravati project, which went quite a bit ahead, got scuttled because of political disinformation. And we have ended ourselves making quite a problem with the Singapore government, which was surprised at how the change of government could lead to a change of such a project of such a scale. So, our reputation, as you're pointing out that about the bus, facing the bus, about allowing manufacturing, greenfield, I don't think is hopeful. And I'm frankly not very optimistic that it can be done by a foreign investor. No matter whatever be the good points about it, we shall have to accept that these projects have to be essentially run initially by local investors. Of course, again, with the caveats, like Asil Mining is, I'm not sure how far it will be able to go with the diamond project. But at least they still have a chance because there'll be some state government or some agency in center which will sort of side with them and allow the project to go through. Once those projects have come through to the manufacturing level, to the level of completion where it starts producing output, then we can expect the foreign investor to come in. The reason why we are not getting too many manufacturing FDIs now, as Mr. Dasgupta rightly pointed out from the figures, is because over the last couple of decades, we haven't been able to build up manufacturing locally. Now, as we build up manufacturing, as local investors are able to build up, we shall over some time start seeing more FDI in manufacturing.
Right.
Then it'll basically be the services led. So that's my point.
Absolutely. Dr. Pullarao, is there a way out of this predicament? Because very clearly both the panelists have brought out that, it's a difficult and a precarious situation we are in right now. And several examples are in front of us over the years where we've seen companies, leave projects midway and go away, many others being frustrated with having to deal with, the red tapeism that is involved. Is there a way out of this predicament?
Very difficult to add to the wisdom of what we have just heard from Ambassador Dasgupta and Sumaji. They have put the whole picture. I only wish those in government take heed of such things. But I'll try to add something and try to draw your attention. We are still exporting millions of tons of iron ore. Sumaji will have the correct number of tons we exported last year. A big, wonderful project was bought by Orissa government to set up a 10 million ton shore-based steel plant in Orissa. And it was scuttled because, and I come from a tribal area, I'm very much for the environment. About 100 people said again a few trees are being cut, and it was scuttled during Dr. Manmohan Singh's time. Then you go back to Tuticorin. They closed a smelter of 40 to 60,000 tons copper, running factory, and we are importing that copper now. One of the biggest factories in the world. You see, we have, as Pandit Nehru said, we need a scientific temper. I think we have got a scientific temper, scientific knowledge, but now we need an economic sense or a business sense or a survival sense. That is very much needed to weigh the pros and cons, the trade-offs. If we cut a few trees here, can we plant it somewhere else? That is sorely missing. And once a lobby starts hitting a project, it's over. It's over. It is brought into the media and to the fore, and that has to be tackled by a strong government, by a weak government, by consensus. That has to be tackled. And I only drew one sector, the steel sector. We import steel, we export iron ore. Therefore, what has happened is certain lobbies have developed which don't want steel industry to come up here, so that you export the steel abroad. Same thing. So government has to create this opinion amongst the people, like the Swachh Bharat, which I very much welcome in the last 7 years. What Gandhiji and others have started, it has caught on in India. Everybody has become aware. We have to have that India, if it wants to just keep on thinking of we're going to become a $5 trillion economy, will catch up with China. You can't do that unless you change your mindset unless there's a consensus across the country, which just now Mr. Sumoy has brought one interesting thing. Change of governments, does it mean change of capital? Change of governments doesn't mean you close your factory. That has to go. That requires more thought than just saying we will get FDI, India is doing great, foreign investors have shown that we are doing well. But as our friends have just pointed out, is this the right investment in the right place? Or they're just taking the cream and leaving? We're not really getting the benefits which we should see from this huge foreign investment, which can come into sectors which are already there and where we have the raw material, the technical knowledge. I would definitely think that before we start congratulating ourselves that we got so much FDI, is it not better than not getting it? Yeah, sure, it's better to get something than not getting it. But are we doing our best? Is it going to address the unemployment problem? Our economy, will it take advantage? As I just pointed out, the trade turmoil all over the world, Britain leaving the Euro bloc, America withdrawing from so many sectors, China being unwelcome in many places. I don't think we're taking advantage of this. And there's a lot of room for that, and there's a lot of room for improvement. Therefore, I think before we sit on our laurels, we should again go back to the drawing board and see how we can take advantage of the new economics, new openings, digital world, everything. And I think we require that very much, a kind of new assessment of our situation.
Absolutely. All right, gentlemen, it's time to get quick closing comments now with the best way forward. Starting first with you, Mr. Das Gupta.
I wanted to mention one more fact, and that is that in the past year and slightly before that, the rate of investment or gross capital formation has gone down in India. So domestic investors themselves are not investing in manufacturing capacity. If you look at fresh investments taking place, if this is so, then how do you expect foreign investors to come in and set up a manufacturing base or share in the investment of domestic manufacturing? So first we have to set our own house in order. Domestic reforms are a crying need of the moment. That is where the first impetus will come from. The second point I wanted to mention in passing is that, of course, we have a very strong, robust judiciary and a lot of judicial activism, but there has to be a time limit to everything. Cases can't drag on forever, including commercial disputes, settlement of contracts, for instance, obligations arising out of contracts. These are taking ages, and this puts the fear in the minds of foreign investors that if they get involved in any litigation, that will be the end of their project. So these are the two areas which come to mind which need to be addressed.
Absolutely. Shubhaman?
Well, yeah, and considering that Mr. Dasgupta has spent a lot of his years in Bihar, the most difficult state to govern, and has succeeded, so that does show that obviously he knows what he's saying. My addition to that reform is that we are having one major thing which makes me optimistic, which is the bankruptcy courts. I think that is something that is showing results, no matter how imperfect, but it's showing up. And I think that is where a real work in terms of reorganizing our capital is happening, and which happens to be a great source of encouragement. So I would say that that is actually leading to a lot of good results that we are seeing in other areas.
Absolutely. And Dr. Pullarao, close the show for us with your quick concluding remarks.
We wish for reforms which are time consuming, judiciary, everything. But there are some low hanging fruit wherever the problems are. Even in the judiciary, they can clear a fast tracking situation for such investment oriented decisions. Government can give more emphasis on how to improve ease of doing business. There are many low hanging fruit which have not been plucked yet by government, which is very easily done with no pain. Environment clearances, pre-industrial setting up, they started all of this, then they stepped back. That you pose the problem, we'll clear it ahead of time. I think such low-hanging fruit, as I'd like to say, an issue which can be easily solved if government attends on that, rather than hoping for the long term to become short term immediately. I think we'll get good results. Solve what can be solved immediately without pain.
Absolutely. All right, gentlemen, we'll have to leave to that. Thank you so much for joining me on the program and putting things into perspective for us. What's coming out of this discussion is that the rise in FDIs is a good thing, but most of the investment has come in the form of foreign portfolio investment, which is very volatile. Most of the investments are coming in completed projects and for brownfield projects. Greenfield projects continue to be an issue. Multiple levels of bureaucracy is keeping serious investors away. The lack of an exit policy and lengthy timeless processes are major deterrents. The lack of time limit or closure in commercial cases is another big factor. Manufacturing is dependent on many other services like power, land, transport, accessibility to ports, etc. Unless we have these in place, we won't see the kind of investment that we desire. Well, before I go, let me inform you about Bharata First Knowledge Center, an initiative that will help each one of you and transform the way you learn. You can go to our website, kc.bharatafirst.com, for more details. Ensure that you look at the FAQs. Most of your questions will be answered there. Register now and avail the limited period early bird offer. The orientation is on June 30th and live classes start on July 1st. So don't miss this opportunity. Go to kc.bharatafirst.com and register today. Well, thank you once again for your continued support. For those of you who haven't already subscribed, please like the video, subscribe, hit the bell icon and then all notifications, and share the content as much as possible too. You can also subscribe to our newsletter as well as get some incisive content through the newsletter. The Bharata First team runs a daily big picture quiz. Please do participate by going through the description in big picture videos. Here are the UPI IDs for those of you who would like to come forward and make a contribution. A small contribution that you make will be a giant leap for us to keep bringing you this content. In case you have trouble with UPI IDs, and you may use our payment link in the description below and follow the steps. All this information along with some must-see recommendations are in the description of the video. Please go through it. That's it from me. See you again next time.